or cryptocurrency trading, nuts and bolts. It's probably more trading than investing that I'm going to be talking about. Obviously, the two areas intersect somewhat, but I'm more of a trader than a long-term investor, as you'll find out. So first of all, my name's Glen Goodman. I have been actively trading shares, commodities, all kinds of different futures, currencies for about 18 years now. And I would say that in all of that time, cryptocurrency is one of the greatest trading opportunities that I've come across. I've probably made more money in a short time than I have trading anything else at all. And this is just over the last couple of years, really. Just a bit of background about me, first of all. I haven't been trading full-time for 18 years. For most of that time, I was a business correspondent at ITV News. So I was a TV reporter, and in my spare time, I was busy trading. There's somebody laughing over there. Is that because I've got a beard now? Is that laughing at my beard? Now, I look better without one, I know. Anyway, so I did lots of that, traded in the spare time, and then sooner or later, I started getting better at it. That fresh-faced young pup was back in 2008, the day of the Lehman Brothers crash. I'm sure you all remember it fondly. And as you can see on the screen on the left, I mean, it's always interesting to see how everything went down. Everything was in the red. It's always useful to remember that when you're trading anything at all, that when the market goes down, just everything goes down. Just get out of everything. That's always my motto, pretty much. And it goes for cryptocurrencies just as much as it does for stocks and shares or anything else. So basically, back then, I'm looking all serious in that picture, but in actual fact, I was feeling quite smug at the time. So I was doing my serious news face, but what was really going on was that I'd been anticipating an event like the Lehman Brothers crash for some time. Obviously, I didn't know it was going to be Lehman Brothers, but there'd been many signs. I mean, Northern Rock had collapsed the year before that. So there had been a long, long run-up to this. And obviously, all the bankers and the banking associations were still saying, no, everything's going to turn around. We've been through the worst of it, but, you know, that didn't wash. Didn't wash with me. So I had gone heavily short, and I was waiting for a day like this. So inside that face, I was celebrating. And I wrote about my experiences in the Times a couple of years ago. They let me write an article about it. My little short coincided nicely with the release of the film, The Big Short. That's how it works. And how I risked it all to turn £3,000 into 100,000. Now, that was back in my kind of more reckless, crazy trading days. These days, since I started doing it full-time and I gave up my work as a TV reporter and decided to become a full-time trader instead. I did that basically as soon as I'd built up enough capital to allow me to quit my job and just trade in my pants in my bedroom, which was just after kind of working as a news reporter for years and years and years. You know, well, you know, it doesn't matter whether you're a news reporter or whatever job you do. Just to be able to just give up and just stay at home and not even get dressed and just still make more money than you were making in your job. It was great. And anybody can do it. And I've only got half an hour, so I haven't got time to tell you everything about how to do it. I'm going to be publishing, well, not I'm going to be publishing. I've signed a publishing deal with a publisher. I'm going to be making a book, which will probably be called How to Make Money Trading Cryptocurrency or something. It will be coming out in a few months once I've written it. But I've signed the deal now, so I have to write it. They say it's in the contract. So anyway, that's basically what I did back then. Then I became a sensible trader, as I say. But what's interesting is that the sensible trading I've been doing, which doesn't allow you to make money that quickly, did not apply to cryptocurrency. The cryptocurrency trading I've been doing in the past couple of years allowed me to go back to the kind of more risky, high sort of turbocharged trading that I was doing back in those days. I'll show you what I mean. I set up this Facebook page to talk about what I was doing, and I started making these wacky little videos from home. And just like the entire crypto world, it started going crazy. This was last year, and my number of followers went from the thousands up into the tens of thousands, and finally up into the hundreds of thousands. Now more than 250,000, still growing, because everybody just suddenly went Bitcoin mad, as you know. And the Bitcoin madness basically allowed people who were in it earlier to start making money, but even people who had got into it relatively late started making money very, very quickly. This was a historic boom and bust. Make no bones about it. I started trading during the dot-com boom and bust. That's when I cut my teeth, and this was very, very similar what we saw last year. So basically, as an experienced trader, I recognized the frenzied mania, and I was determined to get out in time. I wanted to ride it and make lots of money, but to get out as it ended. So that should be on the next slide. This was basically a Facebook post that I did on December the 24th last year, where I sent out a strong warning to all my followers and said, the party's over. There may still be more money to be made in cryptocurrency, but not right now. And it was pretty obvious why. You see that red line that I drew there on the price of Bitcoin? That's a simple exponential curve. Some people were going on about the parabolic rise of Bitcoin. A parabola is actually a less steep curve than the exponential curve. If you remember your maths from school, it was an exponential curve. And it goes all the way back from the beginning of 2016 all the way up to the end of 2017. A steep 2-year rise in the price of Bitcoin. And as soon as that curve was broken, I knew from my past trading experience that it was time to get out. So basically, I got out of Bitcoin at that point, and I started moving out of other cryptocurrencies shortly after, waiting for that crash to play itself out. So I'm going to give you an up-to-date Bitcoin chart. So I'm just juggling. I haven't got enough hands for all these things I'm trying to do. Here's an up-to-date Bitcoin chart. For people who've traded for years and studied the price charts, it's not, in hindsight, a difficult judgment call to say, we should sell when it gets to that stage there. And as you can see, the price has predictably fallen quite a lot since then. The question now, of course, is where does it go from here? You also might be wondering at this point why I didn't just hold on. If I believe in the future of Bitcoin, like so many people do, why didn't I hold on to either Bitcoin or one of the other cryptocurrencies and wait until it goes back up again? Well, the reason is because I trade to make money, not to change the world. I don't know if Bitcoin is going to take over the world. It might do. It might not do. But I'm not going to take the risk using my money. So when I see a clear warning sign like that, I get out. In the full knowledge, of course, that I could always get back in anytime I want. When it's fallen by half, when it's fallen by 3/4. Wherever that curve starts bottoming out and looking a little bit more sensible is when I would consider getting back in. So this is another example of a very similar one. This was Ripple. I don't know if you've heard of HODL. It's what a lot of early Bitcoin investors do. It comes from the word hold, and it stands for, well, it was originally a misspelling when it became a bit of a joke, but people used it as an acronym for hold on for dear life. Basically, buy Bitcoin, buy other cryptocurrencies, and hold them forever. So you might have heard of HODL, or hodler is someone who hodls. Hodling. But I didn't hodl. And this is a snapshot of some of the profits that I made in just one of my accounts towards the end of last year. Those profits were made in just a couple of months by not hodling, by very specifically not sodding hodling. Because you hodl, and those profits would now look like, don't know, 50% at the top there, maybe 100% tops, all the way down to minus 50%, probably down there, had I hodled. But I didn't hodl. I sold, and I banked those profits. This is I probably sound a bit too kind of dogmatic about the whole thing, but I do feel very strongly about it, because anybody who wants to make money from cryptocurrency needs to make money from cryptocurrency, not just believe in cryptocurrency and hope that cryptocurrency will provide them a happy future, because cryptocurrency doesn't care about you. It's not going to give you a happy future because it wants to. So you have to do what's right for you at all times. Now, again, because this is a relatively short presentation, I don't have time to go through all my trading techniques. They will be written about when I get around to writing this book and it's published. But in the meantime, I'll just give you a few hints. There is one chart pattern in particular that I saw over and over again during the past year or so, and it's worth pointing out. It's called, no, wrong clicker. It's called the wedge. The wedge. The wedge. This, if you know about the history of classical charting, is a very, very common pattern that appears again and again on price charts. It was first written about in a famous book in 1923 and has been in countless books ever since then. And anybody who does a lot of trading and looks at a lot of price charts will recognize it straight away. The price is that line there that's kind of like a bit like a staircase. Goes down, up, but not as much as it did before. Down, up, down, up, down, up, down, up, up. And then finally, it breaks out. The price breaks out from the pattern. Sometimes it goes back and retests the top line of that pattern, and then it does a big proper breakout. Sometimes it doesn't do that bit, though. Sometimes it just goes straight up. Very common pattern, and you'll see it a lot. Now, here's one that you might remember from that list of profits that I showed earlier, a 400% profit this was. I don't know if you can see there, but you could draw some lines which neatly show you what the wedge pattern. The problem with lines, and traders like to draw a lot of lines on things, is that whilst they look really nice on that textbook example that I showed you previously, in real life, charts don't necessarily touch the lines at the right points. It all gets a little bit messy, really. So I don't like to draw lines. I just kind of like to sometimes draw them as a reference, but then try and get used to the idea of just recognizing the patterns without lines drawn on them. I'll give you another example here, Ripple. I mean, this is kind of a wedge, but if you try and draw lines, kind of looks a bit like that, really. So I've labeled it the crappy wedge, which you will read about in my forthcoming book. I've invented it. It's the crappy wedge. So it's kind of like a wedge, but not like the textbook wedge. It's more like that kind of wedge, right? A sort of crappy sandal wedge. Here's Neo. You try and draw your lines there. A little bit wedgy, but it's not quite a wedge, and you've got that bit sticking out there. So you know what you're going to do, or you could always draw some lines there. It looks a little bit like a crappy wedge. Again, that was another 400% profit when it broke out there. Litecoin, another similar one. I won't even draw the lines this time, but hopefully you can see it would go down like that, and the breakout is there. Ethereum, another one. Like that, up it goes. So the wedge, remember it, because we haven't got any good setups at the moment. Bitcoin is falling, still falling. All the other cryptocurrencies are falling with it. I'm basically waiting on the sidelines with my money for an opportunity, and that opportunity will come when Bitcoin stops falling, probably bottoms out a bit, which is what usually happens with these things, and then at some point, you'll just see it perk up above the range where it's previously been trading in. And then I'll go, okay, something different is happening here. It happened to Bitcoin in the long slump of 2014 to 15. The price fell for about a year and a half, and then it bottomed out, and then it perked up and went up by 10 million% or whatever it was that Bitcoin rose since 2015. Okay, so remember the wedge, the wedge, the wedge, the wedge. There she is, the wedge. So I've run out of space, but you get the idea. It's a wedge. Let's move on, because I don't have that much time. I would love to tell you everything, but let's move on to how to trade cryptocurrency, the actual nuts and bolts bit. If you're a complete beginner, you want to buy some Bitcoin, first of all. You have to buy Bitcoin, really, pretty much, if you want to trade other cryptocurrencies on the kind of exchanges that I'm going to show you. You're going to one of these websites. Coinbase is the most famous, obviously, but I like these other ones too. You buy some Bitcoin, you get your Bitcoin, and then you need to transfer it to a trading platform. If you want to be really security conscious, you can buy one of these hardware devices to keep your Bitcoin in or to keep your other cryptocurrencies in. Real tech heads always buy these things because they're not connected to the internet. They're just, you hold them in your hand like this thing, and nobody can hack and nobody can steal your money. I guess it comes down to personal preference. I'm not quite that security conscious. I'm not that worried about people stealing my Bitcoins or my cryptocurrencies. I minimize my risks in other ways, which I'll show you. So here are 4 exchanges. Oh, by the way, I should have said, don't worry too much because I'll give you at the end a private part of my website, the Shares Guy website. There'll be a private page where the main slides from this presentation will be up on there, and you'll be able to see. So Bitfinex, Bittrex, Binance, basically anything with bit at the beginning and X at the end, it tends to be a crypto exchange, and then you get a few others called weird names like Kraken, which doesn't fit the pattern, so I don't like to use Kraken. Here, this is Bitfinex. A lot of people think that this exchange is as dodgy as hell, and it certainly is. But I've made a lot of money using this particular exchange, and it allows you to use leverage. Many of you who haven't traded before will not have used leverage, and it might not be that sensible for you to use leverage. Leverage basically means borrowing money to trade with. So the reason I like using Bitfinex is because it allowed me to minimize my risk. I minimize my risk in 2 ways. First of all, there are all those exchanges that I just mentioned and more besides, and I use several of them. So that if one of them goes bust and all my money is stolen, it's only a small portion of my money because I'm using, say, 4 exchanges or even 6 exchanges. The chance that any one of them is going to go bust at any particular moment is relatively small, and that's a risk I'm willing to take. The other way in which I minimize my risk is by using leverage. By borrowing money, what I'm able to do is put, say, I mean, it differs for everybody, but let's say you want to put £2,000 into Bitfinex. So towards the end of last year, I would have put, just for the sake of argument, it was more than 2,000, but say I put in £2,000, and then Bitfinex would allow you to borrow a particular multiple of that amount of money. And it does kind of vary depending on the exchange you use. But let's say Bitfinex allows you to borrow £8,000. The interest rate, by the way, is negligible, so don't worry about that. But you're borrowing £8,000. You've got a total bet value of £10,000. And then you do the kind of trades that I showed there, which were, as I say, those glory days might not come again of 400% profits. That was a particularly special time in all our lives, late 2017. But nonetheless, there will be, in the near future, I'm sure, chances to get profits that might not be that big, but at least are kind of reasonable. And so let's say, just for the sake of argument, that you make 100% profit. The 100% profit is on the 10,000. That's the 2,000 that you put in, plus the 8,000 that you borrowed. 10,000, and then your total profit, if the cryptocurrency rises by 100%, is 10,000. So from 2,000, you have made 10,000. That's your profit. But likewise, the problem with using leverage is all it takes is for the price of that cryptocurrency, after you've put in your 2,000, borrowed 8,000, you've got a 10,000 bet, it only has to fall by 20%, the cryptocurrency, and we know that these things fall by a lot more than 20% in just a week quite often. You will lose your entire 2,000 because that's the 20% gone. That's 2,000 of the 10,000 bet gone. That's your money disappeared. Your account is finished. So the problem with using leverage and why generally you have to have a bit of experience to use it is because you can lose your money very quickly if you don't have the right size bets, and be very careful, which I always am, about closing off any bets that start losing me money. So I'm always happy if a bet is making me money, if a trade is going upwards, I will allow it some leeway. I will allow it some room to breathe as it goes up and then down a bit, and then up some more, and then down a bit, and then up some more. I will always give it a bit of space to breathe. But if I buy a cryptocurrency or start a trade and it starts going against me and I start losing money, I am very quick to close that trade. You've got to protect your capital at all costs. That is the most important thing, because once your capital's gone, you're pretty much finished, really, aren't you? So let's have a look at trading on Bitfinex. Basically, you could take out Bitcoin from Bitfinex. So say I'd made my £10,000 profit on my £2,000 investment. I would take the Bitcoin out, withdraw it using this screen here. Whatever cryptocurrency I was trading, I would just close the trade, transfer it all back into Bitcoin, and then I would take my Bitcoin into Coinbase or wherever it was that I bought Bitcoin from in the first place. Yes, I know it's a bit laborious, but that's what you have to do. You've got to buy your Bitcoin from Coinbase. You've got to transfer it into Bitfinex. You do your trading on Bitfinex. You close your trade on Bitfinex, take your profit, withdraw it back to Coinbase, and then you can transfer it back to your bank account in England with real money that you can spend on whatever weird things you all spend your money on. Here are a couple of companies that you might want to consider as well. IG and eToro are two examples of ways to trade cryptocurrency in a more regulated fashion. So if you're scared of Bitfinex and these various weird unregulated trading platforms that I've mentioned, then these two are regulated in Europe. IG in particular has been around for decades. You can't go wrong with IG. I've been trading with them for like 10 years or more, and they are, I shouldn't really say this in case they go bust, should I? They haven't gone bust yet. That's all I can say for them. It's a good sign. All right, so this is a page on Coinbase where you enter a Bitcoin address. This is the actual nuts and bolts bit of transferring cryptocurrency. You bought your cryptocurrency on Coinbase. You bought your Bitcoin. You want to transfer it to Bitfinex. It asks you for a Bitcoin address. You go to Bitfinex. You click to generate exchange wallet address. It will give you a long string of characters. You copy and paste that long string of characters, and you enter it back into Coinbase, and then your Bitcoins will be transferred to Bitfinex. Okay, and then it appears in one of your wallets. I'm going to skip over the next bits because it gets a bit tricky, but this is a typical trading platform. Bitfinex works like any other trading platform, and if I had 2 hours, I would explain to you exactly how all of that works, but I don't, so I can't. So I wanted to allow a few minutes for some questions. If you go to that web page at the top, that's where you can find the main slides from the presentation today, so you can find the names of all those various companies that I've been talking about. This is my Facebook page, The Shares Guy. I suggest you sign up. I make fun videos. And, oh yes, and my book will be coming out from Harriman House. As I say, I don't have a title for it yet, so I've just put the name of the publisher on the screen instead. Just look for books by Glen Goodman, published by Harriman House, and you'll find it. Questions, please, because we only have a few minutes. But that guy there first.
You pass that back.
Oh my God, I'm hot. So hot.
So you mentioned IG there, but
yeah.
IG spread on Bitcoin is like $70. So what do you do in that case?
Yeah, that's why I use Bitfinex and trading platforms like that. You're absolutely right.
They were like $20 like 6 months ago, but then I left them for that exact reason, and I haven't found a good replacement for, like, I was spread betting, and I haven't found a good replacement. I'm wondering if you know of one.
There is no spread better that I know of that is properly regulated in the UK that will give you the kind of amazing spreads between the buy and sell prices that you see on Bitfinex and Bittrex and Binance. You know, you will see on those platforms, for example, that you can buy Bitcoin at 9,998 and sell it at 9,997. Whereas, as you say, on IG, you'd be buying it at 9,900 and selling it at 9,700. I mean, the difference is out of this world. But that's the price you pay for being on a properly regulated platform that is backed by the UK government to some degree. You know, if it went bust, you would probably get some compensation of some kind from the government, which you wouldn't get, obviously, with these more dodgy but far more profitable trading platforms, which is why I spread my money around so many of them, to minimize that risk. More questions? Yep, that guy there.
You mentioned that you cashed out, excuse me, a Bitcoin last year, and you're sitting tight at the moment. When, what price are you going to look to enter the market again with Bitcoin? When Bitcoin goes up a certain...
It's a very good question, and one that I would have loved to go into in detail if I'd had more time. I would have loved to, because it's
I just
such
need a
an
figure,
important
that's what I
question.
need.
Look at the go back home and look at the curve of Bitcoin in 2014 to 2015 on a price chart. Just find that, look at it, and if, as I suspect, we follow that same kind of pattern, perhaps over a shorter period. It might not take 2 years like it did last time. It might happen in only 6 months. But look for that curve basically bottoming. So at the moment, it's still kind of going like that, downwards. You're looking for either that wedge pattern where suddenly the price breaks out from that falling ladder kind of stairs kind of pattern, or you're looking for it to bottom out like it did in 2015, where it forms a bottom, goes along for 6 months or whatever, and then suddenly, oops, up it comes. Okay. So just, I don't know how long that'll take. You've got to watch the chart and see, and then you'll kind of have a fair idea. This is looks like a good trading opportunity. But always bear in mind, like I always do, when something looks like a good trading opportunity, you get in there, but if it goes against you and you realize, oh, this isn't going the way I thought it would, just get out and wait for the next opportunity. Okay. Just one last question then from this guy.
Hello.
Hi.
So to take your sort of away from today, don't buy cryptos at the moment. Don't hold them, only trade them. Try and wait for the bottom.
Yeah.
So it's not a good time at the moment.
Thanks for summing up. I mean, it just isn't. I've tried to get back into various cryptocurrencies just because I have boredom more than anything else over the last kind of month and a half. I've been buying the odd one here and there, and it just never works out. They might go up for a bit, but then Bitcoin falls, and it kind of drags all the other cryptocurrencies down with it, regardless of quality. Forget about quality. Remember that a picture I showed you from 2008 when the market's going down, just everything goes down. It doesn't matter if you've got the best technology behind a cryptocurrency in the world, which is why I'm not really been talking about it much at this talk. You'd find out all that technology stuff from the other guys here today. But you can have the most fantastic world-beating tech in the world, and one day it will conquer everything and become the next Amazon. But in the short to medium term, it's still going to fall if Bitcoin's falling, because they're all just kind of attached to Bitcoin at the moment. Bitcoin rules the market and will do for, I guess, at least the foreseeable future. Hopefully one day other cryptos will be able to stand up on their own and kind of go up and down regardless of what happens to Bitcoin. But that is not the case now, so I'm waiting. I gotta go, I guess. Thanks.